Hey everybody, I'm Mike DeSepoli and welcome to the Heritage Market Minute for Monday, November 15th, 2021. We hope you had a great weekend. Markets are starting the week off on a pretty flat note here. We have some news to discuss. We talked about the infrastructure bill passing, set for signing later today. President Biden will sign that bill into law. There's a lot of money in that bill that's going to be appropriated to different areas of the economy. The area we're most concerned with is the infrastructure portion of it, right? That's what the whole purpose of this bill was, and ultimately this should help create additional job growth and start to rebuild some of the infrastructure in this country that is certainly much needed. We got some important data this week regarding retailers, right? We're seeing retail sales in very strong fashion reported by some of the nation's largest retailers, mainly Home Depot, Walmart, reporting their quarterly results and showing extremely strong, retail sales growth. Now, I'll tell you why this is important, because last month when we got our readout for overall retail sales in early November from the month of October, the number was very weak, right? So that had a lot of economists concerned. Is the American consumer slowing down? Because let's face it, we are a consumer-driven economy, and the better the American consumer is doing, the better the economy will do, and that is ultimately how we thrive. So these reports, even though they're just two companies in a market of many companies, it's very important to see that two of the largest retailers are showing a real strong snapback in prices, in sales. Even as prices have risen, we're still seeing sales come in very strong. Now, all eyes will look ahead to the holiday shopping season to look at not only supply constraints, right? How many companies will be able to fully stock their shelves, but what levels of spending will we see as we approach the holidays? If the trend holds up, for the last 5 years, we have seen new highs each year for the amount of money that Americans have spent on the holiday season. So in a consumer-driven economy, we want to see more spending. I know it sounds counterintuitive as financial advisors, right? We like when people are responsible with their money, but as long as people are saving and investing responsibly, go out there and have at it for the holiday season. Later this week, we'll get some data on unemployment claims. We'll also get the Small Business Optimism Index, an updated reading on that, which gauges and polls small business owners about how they feel in terms of the economy, their confidence in their business and the economic landscape moving forward. There's also a lot of talk this week about inflation and how it's going to impact the Federal Reserve's path forward. Now, if you follow along the financial news media, there's 12 different people on the Federal Reserve Board of Governors, and they really all couldn't have differing opinions and views on how this should play out. So when one or another makes a comment, it usually tends to grab the market's attention. It creates headlines. And today alone, we had two different Federal Reserve chairmen come out to speak about this. One of them encouraging interest rate hikes to happen sooner than we expect, and another one saying we have to be very patient. We shouldn't be raising interest rates anytime soon. So I bring that up to say, tune out the noise. Don't focus so much on what these folks say. Watch what they do, not what they say. And ultimately, we believe that the runway is here for this market to continue to perform well. The Fed is not going to upset this situation by doing anything too drastically. And yes, inflation is something we are watching. It certainly is a factor in everyday consumers' purchasing decisions. But when we look at history and what it tells us about inflation, while it does inflate the goods and services that we buy, it also tends to inflate real assets like stocks, mutual funds, real estate, and the like. So that is the best protection right now against inflation, but we have to continue to monitor inflation and make sure it does not become a runaway train. So that's all we have here for today. Markets are working through some overbought conditions, moving sideways a little bit, which is quite all right with us. We talked about the fear and greed index had come a long way from extreme fear to being a little bit overbought. So we want to see some of these overbought conditions get worked off before the market is ready to make its next powerful move higher. If you have any questions, reach out to us. Always happy to talk to you about the things that matter with your money. We'll see you back on Friday for the Heritage Market Pulse.